Alright, team members, let's go ahead and get started. Today is Thursday, which means we are nearing the end of the week, so let's take a moment to review the trading results derived from our wave analysis. I conducted the very first live stream on Tuesday where I enthusiastically showed you numerous potential entry points, outlined the overall market direction, and I am pleased to report that right now all our trading positions are in good profit. Additionally, today, important news regarding GDP was released, and the market moved just as we anticipated in our trading plan. This indicates that the market won't always move against the established trading plan during significant news releases, but it can indeed happen that favorable news is released, and the market subsequently moves in our favor, demonstrating that news doesn't always work against our trading strategies. Positive news can also work in our favor. This refers to wave analysis direction. Let's start with the first instrument, gold, colleagues. Many people, I believe, sold their gold yesterday. I also posted the detailed trading setup on both Instagram and Telegram, clearly indicating that the first impulse and the second correction are currently forming at this specific point. I'm analyzing a higher time frame chart, and then the third wave impulse develops, which is typically the longest wave. Ideally, we should now be witnessing the fourth wave correction. I believe many traders are already anticipating the start of this fourth wave, and gradually the overall market is beginning to decline noticeably. Better entry points are, of course, most effectively sought on the hourly time frame when looking to sell in alignment with the daily time frame, which represents the fourth wave correction. Now, let's switch to the 4-hour time frame and examine the 4-hour chart. Here we can observe a clear 5-wave model consisting of the first, second, third, fourth, and fifth waves. It's important to note that the fifth wave can also be identified as comprised of the first extension, 1, 2, 3, 4, and 5. Extensions occur according to the established rules outlined in the wave book, specifically within the first, third, or fifth wave, giving us a critical understanding of market dynamics. Most often this happens in the third wave as it tends to be the longest. It can also occur during the initial wave. In this specific example, we saw the first wave, followed by the second, then the third, fourth, and fifth waves. Therefore, this upward movement may finally be reaching a conclusion or coming to an end soon. Next, we experienced a breakout from the channel, followed by a retest of that channel. However, it wasn't exactly a retest, so we can describe it more accurately as a correction. Overall, the market currently appears to be structured as follows: 1, 2, 3, 4, and 5. We just need to complete that crucial fifth wave to finalize the pattern. Therefore, I believe we have finally reached the breakout point of the channel. I'm currently waiting for a market decline, and I have already secured a profit of 2100. If the market begins to correct itself fully, this situation will merely represent a small portion of the potential profit that could be realized. Ideally, our initial target for this analysis will be the 618 Fibonacci retracement level, which is quite significant. The target profit level for this trade will be approximately $8,285, with a risk amounting to $614 per trade. For trade 112, when you carefully work on the BC correction following the completion of the fifth wave, you can consistently set a short stop and aim for a large profit. This strategic approach makes the trade increasingly profitable for us in the long run. Let me also show you gold today on the hourly time frame. Guys, for those who understand at least a bit about wave analysis, you can also effectively utilize a lower time frame to trade in the same direction as the higher time frame, which in this case will be the 4-hour time frame, since this is the 1-hour time frame we are focusing on. So, in total, we have 3 distinct time frames to consider: D1, H4, and H1. H1 trades in the direction of H4, H4 trades in the direction of D1, and D1 can generally be analyzed according to the rules on the weekly time frame. But I analyze the overall structure of D1, and that's enough for me. On the hourly time frame, guys, take a look here. A clear model is forming. The first wave is an upward impulse, and then the second wave represents a corrective movement in the market. The second wave correction bounces off the significant 38.2% Fibonacci level, which I mentioned in my analysis yesterday, indicating that the market was indeed in a correction phase, and then the next anticipated movement was the third wave. The third wave successfully reached the significant 1618 level, and we are proud to have achieved this milestone. Next is the fourth wave correction, which consists of 3 waves, ABC. Everything looks good. We conducted tests that covered at least the minimum requirements of the initial wave. We all understand the general rule that the fourth wave should not surpass the height of the first wave, although there can be slight deviations in certain scenarios that may affect this guideline. There can be retests, meaning this is a retest of the minimum level of the first wave, from which there are rebounds. Then the fifth wave continues. I believe that in the near future, specifically within the shortest time frame of 1 to 3 days, gold prices will reach the significant mark of 36.85. Fibonacci indicates this will reach level 26218. If the third wave reaches the Fibonacci level of 161.8, then it is likely that the fifth wave will reach the level of 261.8. Thus, you can easily determine these price targets. So, gold, guys, I believe is just beginning to experience a decline. All time frames currently indicate a significant downward movement, suggesting a correction. Moreover, the H1 time frame also indicates that we still need to see the fifth wave developing in the area of 36.85. Once we reach this level, an ABC correction could potentially begin, as the market is unlikely to just drop quickly to these values around 6 and 18 on the 4-hour time frame. It's essential to monitor these levels closely as they will determine the next market movements. This will all happen through 5 waves down, then ABC, then again 5 waves down, ABC, then again 5 waves down, then again 5 waves down. It could be in such a structure. We might also consider this 5-wave model. First wave A, then wave B, followed by wave C. This approach is essential because on the 4-hour time frame, we need to analyze the market within this specific context. A, B, C, which translates to 5, 3, 5 on the more detailed hourly time frame. By understanding and utilizing your time frames more effectively, you can harness the waves with greater accuracy and precision. So on the 4-hour time frame, there should be a model like this: 1, 2, 3, 4, 5. This is wave A, then 3 waves for B, which will correspond to 5 ABC3, all logically, and then again a new one. 1, 2, 3, 4, 5. This will be wave C, so everything is interconnected, guys. If you grasp wave analysis even slightly, particularly those who have participated in my training sessions, I believe they already comprehend the essential concepts. For beginners, of course, engaging in self-learning wave analysis will undoubtedly take you a considerable amount of time until you fully immerse yourself. But I hope my live sessions will help you. Grasping this trading logic over a period of 4 hours will significantly simplify your trading decisions, which is why we're currently pausing the sale of gold. We already have a profit locked in at 2200. Let's move on to the next tool. Today we have Bitcoin. Guys, remember I have a buy position. Here, my overall market structure shows an uptrend. This is the first impulse wave, followed by an ABC correction as the second wave. Then the third impulse, ABC correction as the fourth wave, and then a breakout of the channel with upward movement as the impulse correction 2. As long as the impulse is greater than the correction, the upward movement may continue, but only after this correction is completed. Once this correction is fully complete, we may soon observe the emergence of waves 3, 4, and 5. On a global scale, I am currently analyzing and working on the development of the fifth wave within the daily time frame for a more comprehensive understanding. In general, the development of the fifth wave typically takes about 2 to 3 months, so everything will not happen quickly in this process. You'll have to wait patiently, as only waves 1 and 2 are currently forming. Waves 3, 4, and 5 may take an additional 3 to 8 weeks to fully develop and materialize in the market dynamics. That's why overall I continue to hold my buys. On the 4-hour time frame, we have 5 waves forming downwards, then an ABC correction, then a downward movement. So it's unclear. Maybe this was the first, second, third, fourth, fifth, and this was the ABC correction. You can view it from that perspective. Currently, there isn't anything particularly intriguing happening in the world of cryptocurrencies. It's advisable to focus on gold and the currency market at this moment, as I believe this is an optimal time to profit from currencies following an extended period of stagnation in the currency market. Don't miss this opportunity. Currencies have finally started to move significantly, and there's an opportunity for very good profit. As for Bitcoin, we will wait for the completion of this correction. The next tool is Ripple. Regarding Ripple, everyone, just a reminder that I held buy positions, but right now the market is currently experiencing a downward trend. The market context here was 1 impulse, 2 correction, 3 impulse, 4 correction. The fourth wave is testing a level that we formed with 1, 2, 3 bounces. Ideally, I was waiting for a bounce from this level and the continuation of the fifth wave. But I see that Ripple is currently forming some bearish candle patterns. I can't tell if this will be another bounce from the level and go up, or if we will break the level and go into a deeper correction again. So I still don't fully understand this concept yet. Well, in general, let's focus on effectively managing the risks involved in our trading strategy. If I happen to get stopped out at this point, I won't consider trading this particular instrument again until this correction period is fully over. Likely the channel will be drawn in a structure that reflects this correction, and from that point onward, we'll look to buy again after a certain period of time has passed. If we bounce off the current level and start to turn upwards, I will continue to hold on to my buy positions. That's why, dear colleagues, I'm emphasizing to you that there will always inevitably be losing trades in the world of trading. I completely understand that you're accustomed to seeing numerous successful traders showcasing their achievements on Instagram. No one shows their losses. Everyone seems to only report profits. I'm demonstrating to you that I patiently waited here for a full 2 weeks, perhaps even 3 weeks. I had a profit of about $800, and in the end, I might close by stop. This does not necessarily mean that I made an error or mistake somewhere along the way. It indicates that experiencing losses is a normal part of trading, and some trades will inevitably end up in the red. That's why I'm generally prepared to accept a loss and patiently wait for the next favorable opportunity involving Ripple. Let's move on. Next, let's take a closer look at the current Meta stocks. So regarding Meta, guys, someone mentioned on air today that an individual triggered a stop-loss order during trading. If you received a stop-loss notification on your Meta stocks, I believe you're not setting your stop-loss orders correctly. Let me explain why. When you are trading Wave C, it is essential to set your stop-loss just behind the peak of Wave B for better risk management. We are tracking the impulse movement and have set the stop behind point B. It's generally not advisable to set the stop here, as a market correction could potentially begin at this point. A correction involves liquidity removal on lower time frames. Savvy traders recognize this, and after the correction, the next impulse follows when stops are collected. So, don't make any mistakes. If you're trading a 3, the stop loss should be set just behind the 2. If you're trading a 5, then the stop needs to be set just behind the 4. And if you're trading Wave C, the stop should be placed behind Wave B. These specific placements will serve as the most reliable stop losses in the market, and you will very rarely get knocked out of your positions, so make sure to pay close attention to this crucial guideline. It's already your mistake that you got knocked out on Meta, especially because everything is only just beginning to unfold. Here, everyone, the principle of the market context is quite clear and straightforward. We observe 5 distinct waves moving upward, followed by Wave A consisting of 1, 2, 3, 4, and 5, then Wave B comprising 1, 2, and 3. Hey everyone, it's exactly like what you'll find in the Elliott Wave book. If you open that book, you'll see a detailed table on the very first page illustrating 5 distinct waves and their corresponding ABC corrections. There's still Wave C left, which will consist of 1, 2, 3, 4, 5. Additionally, there exists a substantial potential for significant decline. Just so you know, I shared this trade opportunity with you on Instagram. I believe that everyone could have made an effort to earn from it, even without needing to join my exclusive closed channel for additional resources and guidance. I also sold my shares here. You can see the sales details. I set my stop loss here and my take profit level here. So, once more, the key benefit of this deal is that you can establish a short stop loss while aiming for a significantly larger profit. In my training sessions, I emphasize to my students the importance of pursuing as many profitable positions as they can realistically manage, ideally targeting a range of 1 to 5 or, even better, 1 to 7 positions for optimal success and financial growth. Then, over time, your investment account will gradually grow with small percentages of returns due to these strategic positions that you've taken. If you're just working 1-to-1, or if your stop is always larger than your take profit, or if you don't set stops at all in trading, you won't last long. The market will take your hard-earned money, punish you relentlessly, and I sincerely hope you understand this important lesson the very first time it happens. In the world of trading, we invariably pay with our money for our mistakes or miscalculations. If you make a trading mistake, you will pay for it, and the harsh lessons will continue to unfold until you truly realize and fully understand how to trade correctly and effectively. Embracing these lessons is essential for long-term success in this challenging and often unpredictable field. Here, my calculated risk per trade amounts to $608, and I anticipate a profit of $3,800, making this trade nearly a 1-to-6 ratio. I consider this an excellent strategic trade for the Meta Wave S positioned below Wave A. The initial target can even be set at 61.8. At this level, you can still potentially earn a profit of 1-to-5 here. If you wait here, it will be 1-to-7. If you take the third target at 382, it will be 1-to-10. Overall, we have seen that our 1-to-1 investment has already yielded a profit, so we will continue to hold on to it. I am a dedicated trader who consistently holds on to my profits and avoids closing my positions too early. I either aim for 1 to 3 times my investment, close at break-even, or hit my predetermined stop loss. This happens too. Let's go ahead and move on, everyone. Our next instrument for today is gas. Guys, in relation to gas, let's not forget that at the beginning of the week, we actively traded gas. Here's the current market structure. We observed the first impulse, followed by an ABC correction, and now we are seeing the development of the second wave. Well, of course, the correction was quite deep. We attempted to purchase gas at the start of the week, but unfortunately I got stopped out, which means I hit my stop loss limit and was unable to make any profit from the transaction. Now I continue trading gas, trying to enter a second time. Look, here I observe that the buying impulse is significantly greater than the subsequent correction, indicating that the correction itself is comparatively smaller than the initial impulse. I notice a bounce occurring from the key level of 236, which is widely regarded as a deep correction. If the price level manages to reverse from this point, we could potentially continue with the next third wave and overall sustain this entire upward movement in the market. So today I'm trying to buy gas again. So today we bought here, we set the stop here, and we set the take profit here, meaning we are trying to enter again. Perhaps the second time it is attempted, it will successfully work, as the correction remains smaller than the initial impulse, and this situation could lead to the next upward impulse. However, if there is a downward movement and the subsequent correction exceeds the size of the impulse, then it will signal a reversal movement, indicating that the market is already operating within the context of a downward trend, suggesting a shift in market dynamics. That's why I'm holding on to my gas purchases and trying to buy again. So, guys, another important instrument to consider is meta stocks, and on top of that, this is our British index. We trade it with great caution because it tends to be very volatile. I also shared this trading idea on my Instagram account to keep everyone updated. Overall, if you take a look, there is a clear structure forming: first, second, contained within a triangle pattern, then a third wave, and now this entire fourth wave has been ongoing for about a week. By the way, since this past Monday, I have been actively trying to short it. We have been consolidating in this range all week, and now we need to wait for a significant breakout of this boundary to capitalize on the potential fifth wave. So unfortunately, this trade is also in the negative. Consolidation, again, losses are part of trading. Not every trade will result in profit, some will lose money. I will demonstrate this to you so that you become accustomed to the reality of trading and understand that experiencing losses is an inevitable part of the market. Regardless of what other so-called guru traders may present, suggesting that every trade is profitable and flawless is simply not true. Regrettably, many individuals choose not to reveal their losses because they fear it might negatively impact their reputation. While I firmly believe that traders should openly share their losing trades, as this transparency can foster a deeper understanding of the market, many newcomers often mistakenly think that making money in this arena is easy and straightforward. Losses indicate the system is failing. We must change the system, recognizing that all systems incur losses even if hidden. That's why I'm currently holding sales here. As you can see, there might be a loss of around $400. So let's move on to the currency market, guys. I highly recommend that everyone consider starting to trade currencies now, as they are gradually beginning to show significant movement and activity. At present, we have 6 different currencies actively trading in my exclusive closed channel, each currently yielding a profit of approximately $1,000. If we successfully reach the take profit levels set for these currencies, I anticipate achieving an overall profit of around 15%. Currencies are gaining momentum, making it an ideal time to profit from them. Don't miss these precious moments. They are truly rare and fleeting. So, guys, on the daily time frame chart, we are currently forming the first impulse wave on the euro-dollar, which is subsequently followed by wave A, then wave B, and finally the C correction. This is a regular type of correction. Anyone who has read Elliott's wave theory knows that wave B goes beyond the maximum of the first wave. The first sign of recognizing a regular correction is a false breakout, meaning a breakout of the maximum level of the first wave, followed by a return below that level. Accordingly, we already understand that we can try selling, and this could be a regular correction. It's beneficial because you can potentially earn on wave C with a notable movement and a relatively short stop loss in place. We're currently working on achieving that goal. By the way, I also shared this trading recommendation on Instagram and Telegram at the beginning of the week. But for some reason I received a lot of hate. The hate, as you might expect, happened in this manner. I advised my followers to sell on Monday, anticipating a market correction, which indeed occurred over the next 2 days. During this time, many critics took to Instagram, voicing their disapproval and insisting that my trade idea would not succeed. However, I urged them to remain patient and wait 2 to 3 days, as I believed this was merely a correction. Once this correction concluded, the market began its next upward impulse. The structure of wave C is expected to unfold in a distinct 1, 2, 3, 4, 5 pattern. While there may be some extensions, the overall potential of this trade remains very high. It's important to note that when I share trading ideas, they do not always materialize as expected since we are engaging in swing trading, which inherently involves greater unpredictability. What is swing trading? It's the moment you enter the market and might not see a profit immediately. The stock market might go into a correction soon. We will have to ride out this correction, then the next impulse will start in 2 or 3 days. Overall, this type of trading requires patience. If you can patiently wait, most of your carefully considered trading ideas will eventually reach their intended targets successfully. You don't need to spend all day trying to earn money in the stock market every single day. You have a well-defined medium-term trading plan. So, congratulations to everyone holding sales. I believe that many investors are already holding on to their positions, and the trade's potential remains substantial because a typical type of correction occurs when wave C dips below the minimum point of wave A, allowing you to capitalize on this significant market movement. That's another 3,000-4,000 you can catch, so I think this is just the beginning of the movement. Note that it's better to trade the currency market now. Everything is starting to come alive. Trends are appearing, and don't miss these movements. So, everyone, looking at the 4-hour time frame for the EUR-USD currency pair, we observed a classic model sequence of 1, 2, 3, followed by 4 and then 5, indicating a slight upward trend that is quite weak. However, this entire movement corresponds to wave B on the daily time frame, D1, and currently we find ourselves in a BC correction following the completion of 5 waves. It appears we are in the process of forming the sequence 1, 2, 3, 4, or 5, which will represent wave C in a standard correction on the daily time frame. We are currently holding sales on the euro currency exchange. Well, it's not bad at all. The market has declined today to a value of 16.66. I think we will likely go down to the range of 13 to 14, and I genuinely believe we will reach that point by the end of next week. This is just the beginning of potential changes, so don't miss out on the opportunity for profit. The next instrument is the dollar franc. Guys, here on the dollar franc, this is the daily time frame. Everything is going according to our plan. Already 2,000 in profit. Remember, at the beginning of the week, I bought this instrument. We are working within the framework of 1 impulse, 2 correction, 3 impulse, 4 correction, and 5 wave. For those who attended the review meeting on Tuesday, I mentioned that I was buying at this point, and we have already surpassed 200 points. This may very well be just the beginning of a significant global rise, as we have experienced 5 distinct waves down. And following 5 waves, we typically observe an ABC correction. This could very well be just the beginning. If we analyze the market movements more precisely by breaking it down into subwaves, we should expect to observe wave A in a model structured like this: 1, 2, 3, 4, 5. Following that, we anticipate wave B and then wave C. Therefore, this will likely serve as my trading plan for the dollar franc until the end of the year. Initially buying it, then possibly selling, and subsequently buying again. This trading strategy is referred to as swing trading, where you capitalize on the first movement with one trade, the second wave with a separate trade, and the third wave with yet another distinct trade. You should aim to have a total of 3 distinct trades executed over a period of approximately 2 to 3 months, or possibly extending to 6 months, ideally to optimize and refine your strategy perfectly. That's why we will work here, continuing to hold our buys. Everything is going according to the trading plan. Next, on the 4-hour time frame chart, we observe the clear formation of waves 1, 2, 3, 4, and 5. According to the principles of wave analysis, this sequence indicates that waves 1, 2, 3, 4, and 5 collectively represent wave A, subsequently waves 1, 2, and 3 signify wave B, and finally the sequence of 1, 2, 3, 4, and 5 will complete wave C. This is an impulse down, this is a correction up, and this will be the completion of the ABC correction, followed by the formation of the first and second waves again. That's why I congratulate everyone here. I believe we can still see significant upward movement based on the daily scenario, so I won't be locking in the profits just yet. Let's wait and see how things develop further before making any decisions. Here is my total profit on the dollar franc. Let's see how much it is. Here we have a total of 9,000 candidates, with 9% competing for a single position. So this will be approximately classified as wave A. A. It could be approximately 7 to 8 points lower if it finishes as expected. It will consist of 5 distinct waves, so I plan to act on that movement. The potential risk associated with the trade here was 2%. With a 2% risk involved, I can make this move now. When you are working on wave C, it allows you to adjust the stop loss for wave B right here, ensuring better risk management. And now my calculated risk will be approximately 0.7%. 0.7% for a profit of 9%. A trade of 1 to 12. This is the significant advantage of wave analysis when you carefully trade wave patterns and can then effectively adjust your stops. You can also strategically adjust your stop loss orders for wave B or for wave 4 or wave 2 to effectively minimize your risks in case of any unclear market situations that may arise. That's why everyone here is doing exceptionally well, folks, so let's keep on buying. The next instrument is the Canadian dollar. Today, everything in life feels remarkably simple. Today, in terms of currencies, I'm experiencing a personal profit of over 10%, which is quite significant for me. We're also trading the dollar-yen in a closed channel, where our profits are astronomical, beyond what I've already shown you. Both the New Zealand and Australian dollars are considered profitable currencies. I currently have achieved over 15% profit across 6 different currencies in my portfolio. So you're suggesting that we should trade crypto once the currency market begins to recover, even though crypto itself is currently stagnant. I enjoy these periods greatly because I have a well-curated portfolio. I have currencies so I can always earn from them. Crypto. I can also earn additional gains when crypto starts moving. Meta and Tesla stocks. Stocks are independent and do not rely on the performance of cryptocurrencies or the US dollar. They move on their own. Gold and silver are distinct financial instruments. And of course, oil. The oil market consistently follows its own specific scenarios. In general, this is the type of diverse portfolio I have created for school projects and assignments. I highly recommend that everyone considers creating a diverse investment portfolio so that you're not solely dependent on the unpredictable nature of cryptocurrencies. Right now with crypto, honestly, it's still unclear whether this correction will finish or not, but I will earn 15 to 20% in the currency market. Once cryptocurrency becomes more understandable and begins to demonstrate noticeable movements, we will be able to profit from it. That's why you should always try to divide your investment portfolio into different segments. It's like an investment rule. Always distribute your money evenly across 10 different segments, ensuring each one receives the same amount. 2, 3 might not perform, but 7 will yield profit. Either 5 may fail or 5 could be profitable. The exact same thing occurs in this situation as well. I also spread my risks across all these segments. These include currencies, stocks, cryptocurrencies, oil, gold, silver, and in the end, I get some small profit. But there will also be losses. So there are no significant gains without experiencing some losses, as you must learn to accept setbacks and effectively manage potential risks. The Canadian dollar is forming here. First impulse, second correction, third, fourth, fifth. Then take a moment to look. This is the first, second, third, fourth, and fifth items in the list. In principle, I think we will soon reach the significant 61.8 target for the Canadian dollar, and I genuinely believe we can come to this profitable area and securely lock in our profits. Now let's take a look at the 4-hour time frame. On the 4-hour time frame, we have observed the formation of 5 distinct waves moving upward, which is subsequently followed by an ABC correction pattern. This particular up and down movement, however, does not qualify as a corrective impulse since the waves are of equal size. Nevertheless, this upward movement could potentially signify the beginning of the first wave in a more extensive sequence, possibly consisting of the first, second, third, fourth, and fifth subwaves. Following that, we may witness the formation of wave 2 and then waves 3, 4, 5. Indicating the possible commencement of a new upward trend for the Canadian dollar. So, dear colleagues, for the time being, we will continue to hold our purchases. However, I believe we will need to make a decision to close soon. This is because a market correction has not yet begun, as we currently observe a sequence of 1, 2, 3, 4, and 5. In this situation, we should ideally withdraw our funds, but perhaps we will at least reach our financial target, and then we can secure our profits. Currently, we are pleased to report a profit of $2,000. All right, everyone, there's just one final instrument I want to discuss today, which I previously presented at the beginning of this week, the oil market. Regarding the oil market, dear colleagues, please take a look at the current situation here. On the daily time frame just yesterday, I provided detailed recommendations to buy oil for everyone in my exclusive closed channel, ensuring they had the latest insights. We bought oil yesterday and already have profits, and we exited our sales because they are no longer relevant. What do I see here? First, I observe on the daily time frame this is the first instance. Second instance, then 1, 2, I notice a sideways movement. In a sideways movement, there are 2 possible scenarios, a breakout upwards, a reversal, or a breakout downwards, moving with the trend in the framework of the third wave. Now, oil will approach this upper boundary, and we need to watch the market's reaction. It will either break out or reverse. I have already attempted to make a purchase here on a lower time frame, aiming to establish a favorable position as the price approaches this crucial level in the market. Why is that? Because many traders start making decisions at the very level of buying and selling without understanding whether there will be a breakout or a bounce. Just take a moment to consider it. You can't truly predict what will occur when the price finally reaches this particular level. It will either break upwards or bounce back. And we definitely can't fully understand what actions to take when buying and selling in this market here. I've adopted a strategic approach where I aim to purchase shares at a slightly lower price point. When the stock price nears this level, I may choose to close my position at break even. This way, if the price fluctuates upward and then downward, I can exit calmly without incurring a loss. If there happens to be a breakout at this specific level, then I will persist in working diligently to grow my capital and profit. That's why, colleagues, we are currently in a good position in the oil market, because we managed to buy before this level, as I absolutely cannot know if it will be a breakout or a bounce. How did we buy? The purchase was made on the breakout of the triangle, meaning when you see a triangle pattern in the market, it indicates that the market can go in two directions. In this context, we had the first, second, and then a long consolidation. It lasted for 2 entire weeks. Remember, we held special sales. Then a vibrant triangle suddenly appeared. Certainly, here's the expanded text. Of course, following the formation of the triangle and its subsequent breakout, I decided to close my sales positions and opened new purchases. Now, if the market moves upward, even if we manage to break through this significant level, which we are likely to test soon, around the 70 mark, we have the potential to move even higher in the coming days. If there is a bounce from this particular level, we need to carefully consider either exiting our position here or exiting at break even or with a small loss and then start selling. Then we will work on selling. So for now, everyone, unfortunately, there's really nothing interesting happening in the oil market. I'm simply presenting you with the chart to help you clearly understand that this particular market has been experiencing a sideways trend since July 8th. Today is already September 26th, which means we've been stuck in this sideways trend for nearly 2 months, indicating that you likely won't be making any money here. Those individuals who are eager, youthful, and have a strong desire to make quick money. In this type of market, you definitely won't make any money. You need to carefully consider trading in the direction of the prevailing trend and effectively work with today's price triangle. We had a sell position. We waited for it for 2 weeks. We sold here. We experienced a $200 loss today. I bought expecting that we would break this level and go up. Yes, but it's unclear what will happen next. To succeed, aim to minimize losses as much as you can in this scenario. Then maximize your earnings during the trend to effectively secure your profit percentage. This is how it should ideally work because, a few beginners came to me and they started trading oil successfully. They did not manage to make a profit in an entire month. I strongly believe that you simply can't make any money in such a challenging market environment. We need to wait for the trending market to start. Did you see how all the currencies are moving right now? All 6 currencies that we actively trade have finally begun to show movement in a clear trending scenario. However, if we take a closer look at the various currencies, we can see that we were actually stuck within a narrow range for an extended period, which meant we couldn't earn any profits during that time. We capitalized on a portion of this upward movement, then sold our positions, and now we're attempting to catch the ongoing trending movement. Alright everyone, let's remove those rose-colored glasses as the market won't consistently provide you with profits every single day. The financial market is inherently cyclical, often moving through periods of consolidation and stability. However, once a trending market emerges, that's when we truly begin to capitalize on opportunities and earn substantial returns. Everything operates in cycles. There are periods of non-trading markets and phases of trending markets. We earn in trending markets while in the non-trending ones. Unfortunately, we will try to sell and buy cautiously and manage risks properly. So let's completely remove all the persistent illusions that the market is actually simple. And during such periods of consolidation in the market, the true essence and character of a trader are truly revealed and tested under challenging conditions. It's about how well they can control their emotions. Here, the market will test your psychology. It will thoroughly test you on everything, your greed, your excitement, and your resolve, particularly in these times. During such challenging periods, particularly when the market is clearly trending downward and profits are steadily rising, I would confidently say this is an easier phase for trading. You can simply open a sell position at this point, wait until the end of the week, and observe as your profits continue to grow significantly. This is an easy market. We all know how to make money here. However, when the market shifts into sideways movements and experiences prolonged periods of consolidation, this situation will truly test the type of trader you genuinely are. Will you be able to successfully avoid blowing your trading account, managing your emotions to not become frustrated with the market dynamics, resisting the urge to increase your risk levels, and refraining from hastily changing your trading strategy? Because regardless of the strategy you choose to implement here, it ultimately won't lead to consistent profitable trading results. Everything is cyclical overall. That is precisely why, esteemed colleagues, we must all fully comprehend that the market operates in cycles, and following a downturn, there will inevitably be an upturn that will ultimately provide you with a substantial and very good profit opportunity. Eventually this will occur. You simply need to be patient and wait. I believe now is the perfect moment to act because I am experiencing astronomical profits on various currencies. This is truly just the beginning of my success. There is still significant potential for both decline and growth in the market. Guys, I want to remind you that until the end of this month, there is an attractive 20% discount available on all wave analysis tariffs we offer. You can also join in on this opportunity and try to earn on various currencies while the market remains stable, as it hasn't yet fallen or risen regarding the dollar-franc pair. Take advantage of this chance to enhance your trading experience and potentially increase your profits. And there are still several intriguing new entry points for you to explore and work on. There will be a special discount available until the end of this month. You also have the option to extend your current tariff plan or purchase a new subscription entirely. This is particularly important for market investors losing money. If you are occasionally losing money, consider changing something in your strategy. Perhaps wave analysis will help you stop losing. It helps many. There are many participants. I see many reviews, meaning that many have become more disciplined in trading because they have a trading plan that they simply follow, setting stop losses and take profits, and that's all they need to do. Additionally, they are also learning wave analysis concurrently, such as how I construct waves, which serves as a practical example of how to execute it correctly. If you're interested, you can message me directly on Telegram. There's a 20% discount for the subscription, and I will outline the rates for wave analysis.